Good morning, everyone. Welcome back to Morning Markets on Wednesday, the 20th of May. A couple of things that we've been discussing this morning that I'd like to share with you. The first was looking at the performance of asset markets across the globe over the past 24 hours. What can we observe there? Little change, really. If we look at sovereign and credit markets, very little movement in spreads and yields there. Currency markets, not a lot happening. Probably in equity markets, we can observe equity markets globally trading down between 0.5% and 1% over the past 24 hours. Interestingly, in Asia today, most major equity indices are in positive territory. Why can we see that change in equity markets? A lot of that is about what we discussed yesterday in the role that sentiment provides. Sentiment on Monday was clearly buoyed by the Moderna vaccine study that was released. What did we see yesterday? We saw a number of scientific journals, scientific websites questioning the amount of data that was actually disclosed. And as we all know, data is crucial to being able to make an effective decision on the validity. So that was one of the challenges for the market yesterday, just assessing the pull and the push from the data that was released versus the strength of and the quality of that from the scientific community. Other things that we discussed today was the ongoing rhetoric and the escalation in rhetoric, I suppose, between the US and China, and the challenge that relationship does have at this point in time. That's nothing new. It's been challenged, as we've observed through last year, through the trade discussions, and that rhetoric does seem to be heating up again. Putting that in context, we had President Trump a couple of weeks ago signing into law a ban on one of the government pension funds investing in Chinese equities. We've also seen overnight NASDAQ, the growth market, if you will, in the US, for want of a better way of describing it, changing some of the listing requirements for Chinese companies, and in particular the accounting standards that they will need to adhere to. This isn't a new debate, and it's been something that has been going on in the background for many years. But it's interesting that it comes to the fore today and the changes are announced. What will it mean? It probably makes it slightly harder for Chinese companies to list on NASDAQ, so curtailing their access to some capital. But again, this has been a known discussion in the background and is in response to some of the corporate governance challenges that some of the listed Chinese companies have had in the US. The other thing that we discussed this morning was around the economic data that's come out of the UK over the past 24 hours. Specifically yesterday we had the unemployment data, and yes, it does show a material pickup in numbers for April. But then if we look back at March, it sort of highlights the strength that there was in the UK economy. And it also serves to highlight the difference in approach being taken between the UK and the United States, where the US is supporting the individual worker, and in the UK it's supporting the wages through the furloughing scheme. Then today we had inflation data for the UK, and again that just follows the trend that we've seen across economies globally, specifically falling producer prices and consumer price inflation easing. That's not to be unexpected at this point in time, just given the magnitude of the falls that we've seen in energy prices in particular, and that component is significant when we look at that both in producers and consumer price indices. In other news, we had the PBOC meeting in China, and there was no change to interest rates from China as yet. I still think that's something that we could see in the weeks and months ahead as the Chinese authorities offer further support to their economy. And then just looking ahead to today, we have the minutes from the April FOMC meeting. I think that'll be an interesting set of minutes for one reason in particular, to see what the FOMC discussed around negative interest rates and how they think they could or could not be used within the US. Clearly, in all of the commentary that we're observing in the media at the moment, it's definitely being ruled out, but it's just be interesting to observe the context of that discussion in the minutes. That's it for today. Please join me again tomorrow. Thank you.